Hello everyone and welcome back to the channel. My name is Brent, and in today's video we're going to go ahead and go over the M1 Finance dividend portfolio recap from the 7th to the 11th of March 2022. We're going to go ahead and hit 5 topics, go over the overall performance of the M1 Finance portfolio. We're going to go ahead and go over number 2, the weekly performance. What stocks were up, what stocks were down, how did we compare it to the 3 main indexes. Number 3, we're going to go ahead and cover the past buys, sells, and dividends in the portfolio. Number 4, we're going to go over the current portfolio dividend income, update our dividend tracker. I'm going to go ahead and show you guys how you can set up a free dividend tracker to use for yourself, your own portfolio, track your dividends on a weekly, monthly, yearly basis. And then number 5, what stocks are we buying? We had a bunch of positions that recently took a nearly 10% nosedive this past week alone. So we're going to go ahead and showcase about 6 of those positions. See, are there any one of them worth, buying a bit more of? And of course, we have been buying a bit more Starbucks. So we're going to go ahead and also take a look at the dive on that one as well. There's a lot of excitement out there in the market right now, and there's a lot of opportunity long term to just be buying and investing. So again, if you guys are brand new here to the channel, definitely go down below, hit the subscribe, make it gray, hit the bell, select all notifications to be notified every time we release a brand new video. I'm trying to release at least 2 videos every week. One video going over the 1 week recap, and then our second video will be like a 1 week option recap because I kind of put off option videos and then consolidated 2 months worth of options within a Merrill Edge portfolio update. And I'll probably want to do like a weekly options series. I've seen a couple other YouTubers do that as well, and I always tune in to see what they're buying and selling for options. So I think that's pretty interesting to kind of get into. And I have also taken a look at the community tab as far as, what would you like to have discussed more here on the channel? And it was actually across the top, how to do XYZ. I guess I'd have to have some suggestions on what type of content to make on XYZ content. This month's total dividends, that one we're always kind of doing the weekly stuff, but I could also jump into the monthly recaps of total dividends between, the M1 Finance portfolio or all the portfolios, and then what options I sold and puts for. So that's something I get a lot of comments or questions across the board as well. So definitely, get into that in the future here as well. So let's dive into the video. Enough talking, right? So overall, we're diving into the M1 Finance Roth IRA portfolio. This is a Roth IRA, completely tax-free after you've been invested in it for 5 years and after you're 15.5. So once you've hit 15.5 and you've had the portfolio account open for 5 years, you can then begin to withdraw out of it completely tax-free. The capital gains, the dividends, the equity that you've made in there is completely tax-free. So that's what we're kind of using this portfolio, building up over the next 30 years, just growing this thing as large as we can. This is my wife's portfolio. I have my own Roth IRA. We have our taxable accounts. They're all separate in their own ways of how they're working. This is a dividend-only portfolio, whereas some of our others are only the ETF style, like S&P 500 and VU, VTI, or SPY. So they're a little bit differently made. So overall, this portfolio is up 61.16%. This is pulled off those highs by a bit. At a high, I think we had gains of around 3,000 or 12,000. So we have pulled back slightly, but that's capital gains. And that can come and go on a weekly, daily, month, yearly. It could just kind of trend sideways, and that's completely fine. This portfolio is designed to trend sideways. The thing that I'm mostly looking for here is earned dividends. We just broke $3,000 of earned dividends in this portfolio. So over the past 4 years now that this portfolio has been active, it just broke $3,000 in earned dividends. That means in the 4 years, we made essentially half a worth of deposit. We can only deposit $6,000 into the Roth IRA every year. So we hit $3,000 of that. We created $3,000 of equity within this account that couldn't have been deposited there otherwise. So let's go and take a look at the 1 week recap. So this is what I'm kind of talking about. This past week was brutal. Our portfolio is down a whopping 2.69%. Now, if we compare this to the S&P 500, the S&P 500 is down 2.88. So We came essentially right in line, 2.68%. The Dow Jones was down 1.99%. And we can see that the NASDAQ here, this tech-heavy NASDAQ, this has a lot of Apple, Amazon tech, Google, Tesla. This is down a whopping 3.53% on the week. So year to date, look at this. It is now down 17.9%, putting it in essentially like a super loser here. It's basically almost double the position of Dow Jones, down 9.34%. And then we have the S&P 500 down 11.79%. The Russell over here probably lost the least amount. It's down 1.06% on the week. Year to date, it is down 11.83. It's not one that a lot of investors really focus on and take a look at. I think a lot of investors mostly take a look at the S&P 500, the Dow Jones, and the NASDAQ, but I always like to include it in my weekly recaps. As for the most part, it has done pretty bad. It's kind of in line with the S&P 500 right now as far as year-to-date performance. But overall, I think over the past 1 year, I think it's still negative in compared to the S&P 500. Yeah, S&P 500 still has about 6.73% gain over 1 year ago, whereas the Russell 2000 is down 15.35%. So pretty rough market out there this past week. Now, where did we lose the majority of our equity? Now, if we take a look here at our gains and losses for the week, we only have 4 positions that were green. That is why we lost 2.69. Pfizer here put on a straight 3.33% gain. I think Pfizer is one of those positions that's just skyrocketing to all-time highs, especially this week. This week alone, I think it is sitting at all-time highs right now. IIPR, this is a REIT. Method Electronics up 1.45. And Merck. Merck has been kind of bouncing. I think it had fallen for a little bit. Offered some opportunity to potentially buy if you're long-term buying it, or just kind of wanted to start a new position on it. I already had a fairly good size position that I'm kind of going long on it, so it's up 0.55%. But the majority of the portfolio here is negative, and it starts to escalate here. After the first 3, it starts going into the 1%. Then just after another few 3, it goes into the 2%. And then after a few more 3, it goes into 3%. And it just escalates from there all the way down here to Clorox, down a whopping 10.07%. Stanley Black & Decker down 8.96%. UGI 8.89%. Cisco 8.4%. Starbucks 7.95%. And the list kind of goes on right there. So it was a pretty brutal week out there in the market. We are down $1.1 thousand on the week, and that is rough. But we did receive some dividends there, future dividends of $4.52. We've also deposited some cash into the account of $138.41. So that leads us up to our buys. What did we buy last week? Well, we split it between 2 positions. We bought a little bit of DLR, Digital Realty Trust, $75.38, and we bought a little bit more Starbucks. We're trying to build up the Starbucks position. So we just saw that it was down this past week about 8%. So that's opportunity that we didn't have last week that we have this week. Starbucks is the position that we're building long term. Starbucks just dropped 8%. We just got an 8% discount on a position that we've added into our portfolio. We want to invest in it long term. This should be seen as positive, not negative. So we're just getting a really good opportunity to buy it now, hold it for the long term. That's going to grow in capital appreciation. We also received 1 dividend from Johnson & Johnson of $10.75, and we deposited our weekly deposit of $127.66. So every week we deposit $127.66 on Friday, and then whatever dividends that we've captured that week, we have for our total buying power. So that is the activity for the week. So jumping into now number 4. Let's go ahead and update our holdings. So again, we had purchased Starbucks and DLR. So if I go to my holdings right here, and I go to my SBucks position right there, and I go over to my tracker here. We're at trackyourdividends.com. This is a free website to track your dividends. You don't have to pay for any of these features. You just go into the portfolio. You want to add an account in here, give your account a name, US dollars. You want to manually put in the stuff or automatically update. Because I'm using the free service, I just go manual and add the accounts in. Once the account's created, I can go up to the top, select add holding, punch in the ticker symbol, how many shares I own, the cost basis per share, and boom, it's added in here. It gives me how many shares, my current price, the change percentages for the day, the average cost depending on your total shares and your cost basis, and then it gives you your profit. So on Apple, I have a little over $1,100 of profit. You can see our dividend yield and our current yield on cost. So when we purchased it, and every time that they've raised their dividend year after year since we've owned it. So while the current yield offers a 0.57 if you're buying it right now, based off where we purchased it, it is giving us a 1.02% yield. And our annual income from Apple was about $15. So it kind of gives you all this information for free. So our annual income right now sits at $1,143. So right now I want to go ahead and update Starbucks. So let's go look up Starbucks. So here I can hit the little pencil to edit. I want to update my shares, right? I'm at 3.33. Right now we're at 4.18. So I'm going to go ahead and just kind of type it over here in another window really quick. And it is 4.18126. That is our current shares. So now I can come over here, update my shares. My cost per share is this number right here, 91.55. So we actually averaged down last week, so that worked out pretty good, 91.55. So right now we can see here that we're making $6.54 yearly dividends from Starbucks. If we hit update holding, we'll go from $6.54 to now $8.20. So we increased our dividend income by about $2 just by investing about $50-$60 into Pfizer. That's a pretty good increase right there. The other position right here that we purchased, DLR. So if I go over here, look for DLR, we can see that we now own let's see here, 11.96654 shares of DLR. So I can go over here, hit the little pencil, update my shares from 11.42 to 11.96. Our cost per share went from, it's now 140.76, 140.76. So we actually averaged down that position a little bit, right? 140.76. Yeah, we averaged down. We had been making $55.76 in dividends. That is going to update to $58.40. So if we go up to the top, our annual income prior to our changes were $1,143. It is now $1,147. So it averages it, or it changes it to the whole number. So there might be some change out here to the side, but overall we've increased our dividends by about $3 and some change over just investing a little bit last week alone. So that is the update on the current portfolio income. So our equity is sitting at about $40,991 and $40,991. That is accurate, right on the button. Now, as far as what positions we want to buy this week, this is where I kind of threw all these positions in here. Now, these are based off positions positions that I currently own. And if I look at the 1 week recap here and I scroll down to the bottom, all these positions are just kind of put in here from worst performance on to Colgate, I believe was the last one I punched in here, right? Colgate, yeah. So Clorox was the worst position on the week. You can kind of see this downtrend for the past, this last year, right? So if I look at the 1 year here, it's just been downtrending the entire time. Let's go ahead and look at the percentage that it's lost over the last 1 year. So in the purple, that's the price change. So Clorox, if you had been invested in Clorox over the last 1 year, you are down roughly 31.13%. Now, I'm not going to lie. I had started buying Clorox about a year ago. So my position in Clorox is down about 25% right now, right? If I look over here, this is showing 56.96. It's not that bad. It's actually down about 25%. I had invested about $2,000 into it. It's down over 0.25% there. So it's over 25% now loss. So it's in that range. It should actually tell me better here, right there. It doesn't tell me the overall performance negative to the downside, but it has got beat up pretty badly. This one doesn't look like it's going to improve anytime soon. You can see earnings per share there, trailing 12 months is on a downtrend. This could just be downtrending for a while. This is one of those positions where I could cut my losses, try and invest my capital elsewhere, to kind of throw it into a better long-term growing position versus kind of holding out and hanging in this position. But, you know, I'm going to let this one sit for right now. I don't have any way to tax loss harvest my loss. So it is paying me a dividend at the moment. If I could find a position where I could sell this one, that's a 25% loss that I would take. You know, I still hold those shares. If I sold out of this position now, I'd essentially be locking in a 25 to 30% loss in equity. That's $500 that I lost that I'm not going to get back in this position if I sell right now. So I don't know how I feel about losing just $500 there worth of equity, just, you know, actually locking it in. Stanley Black & Decker, this one's been on a downtrend for quite a while. It doesn't look to be kind of picking back up. We can see its earnings per share kind of on the downtrend here as well. Let's go ahead and throw in revenue, net income. So revenue is in the orange. So revenue's been kind of topping out. It's not doing a whole lot. If we look at net income in the blue, it's beginning the downtrend as of October 21. So October of 2021, their net income's been kind of on the downtrend. This affects their their earnings per share as well. So that's kind of why they've been kind of downtrending. See, they've already been downtrending since let's see here, April, May, June, like May and June of 2021. They've been on a bit of a downtrend. Their revenue kind of topped off. Their earnings per share began to top off. And net income kind of topped off. And kind of been downtrending very slowly, whereas their share price has been kind of just smashing down into the ground by 23.10%. So I'm going to hold this one off with a stick as well for the time being. UGI. UGI. This one doesn't look horrible. Their price looks horrible. You know, over the last 1 year, the majority of their losses are here. In 2022, you can see a big downtrend right here. If I go year to date, yeah, most of their losses are taking place in this year alone. Yes, if you had bought them in January and you hold them right now, UGI is down bad. 18.61% over the last 1 year. If we look at let's see here, where's net income in the blue? So it kind of peaked out. Maybe that's what happened here. Earnings per share is in the brown. Let me go ahead and remove the revenue, net income. And all I want to look here is their earnings per share. So it looks like their earnings per share had actually done pretty well. It's not terrible. Let me look at the 3-year. So yeah, I'm not understanding why this one is downtrending as much as it has been. Their earnings per share is looking to be picking up. As of July 2020, quarter after quarter, their earnings per share just grew and grew. Whereas their share price, it looks like it had been kind of growing and recovering out of that crash in 2020. But here recently, it kind of took a bit of a dive. So that's pretty interesting. I'm not sure what would cause UGI to kind of dip as much as it has in 2022 now. It doesn't show any signs of, potentially bouncing or recovering. You can see it kind of stalled out here, hit a low, bounced to the low again, double bottom, but then it broke down, made a lower double bottom, and just kind of flopped. And there's no sort of recovery. There's nothing in place right now that's saying, hey, buy me, I've stopped falling. Now this one is still on the downtrend, but it could potentially be stopping. And its earnings per share don't look too bad where it wouldn't recover in the future. So I'm going to mark that one on my list to kind of keep watching it. Cisco here, let's go look at the 1 year. Cisco's not bad. I don't mind this one. I don't mind buying this. Earnings per share is still on the uptrend. There's nothing showcasing that it's going to be downtrend anytime soon. It's below 50-day, 200-day moving average. There's really nothing to showcase it, the recent dip for this past week. So I don't mind buying some more Cisco. I like Cisco. Starbucks. This is the one I've been kind of buying here lately. Earnings per share still skyrocketing high, even if it pulled back slightly. If you look at the last 3 years, their earnings per share quickly recovered, actually higher than it was pre-crash in 2020. Whereas their share price looks to be pulling back even further during that crash, or just right in the ravine here during their crash of 2020. So Starbucks is another position I don't mind buying and holding. Main Street Capital, big swing there in their earnings per share. Not a company you care much for their earnings per share. It's all about that funds from operation for REITs. Let's go take a look at their funds from operation. That is in the pink. Funds from operation actually dropped. Share price dropped here really sharply. Funds from operation dropped and earnings per share all dropped, but it's all recovered here really nicely and strong. Funds from operation is actually growing really, really well to the upside, whereas their share price fell pretty sharply here recently. So not a bad one as well, right? Main Street. So I'm going to go ahead and write a few of these down. Cisco, S-Bucks, Main, all look to be doing fine. Just that, volatility right now in the short term is pretty rough. So it's definitely creating some opportunities for some outstanding companies to just take a bit of a dive, offer some opportunities to invest in them long term. That's what's kind of happening right now. Apple, Apple, their earnings per share is just uptrend. Let's see here. If we look at the short term here, their share price is actually below. Now, we could be hitting here a bit of a death cross right here, right? The 50-day in the blue just crossed underneath that 200-day. This is kind of showing a death cross. So this could actually mean that there's no end in sight. There had been a bit of a stopping point at, let me remove the percentage change. About 160, right? 160 had been their bit of support. They fell back to 160. They hit it. They didn't fall behind. They picked back up, grew to about 176 again, fell back down, hit 160 again. They hit that support level. It's starting to kind of build a little bit of support. Started to grow once back again. Didn't make it out, puttered out, and now fell both below 160. And it's kind of on a downtrend. So it could continue falling down into the 140s, 130s. Right now it would be a tough time to buy Apple because there's no end in sight as far as its downtrend. But let's see here. Let's take a look at Main Street real quick. I want to see something. Yeah, even these ones, they're really hard to buy right now. It's really hard to buy into these because you don't know when it'll stop. You don't know when they'll stop bleeding. Cisco, this one could potentially, just kind of bounce and move higher. But these ones right here are just kind of bleeding out. There's no stopping point, right? There's no support level for them. Colgate right here, I just had a laugh. That one's crazy. It had a really big slide, moved to the upside. Yeah, it has like these big old gaps. It goes down, comes back up, goes back down, but you can see earnings per share. I can remove funds from operation now, but its earnings per share here in the green is just on a downtrend. So Colgate here, it is kind of negative. It's actually probably below anywhere it's been in the last 1 year right now. It doesn't have any support. Colgate could potentially fall down into the 60s, mid 60s, high 60s, like anywhere from 65, 68. Before it finds any sort of stopping point. It could even fall all the way down to 60, right? Those March 2020 lows. Its earnings per share is actually falling off a cliff right now. If the data is correct, I'd have to go look at their earnings. But right now it's kind of showcasing some pretty negative earnings. So if I were to buy this one more, I'd want to do a bit more research. So I have 3 of them on my buy list now right now. I have UGI, which is kind of off a cliff. So I'm going to hold off on that one as well. I think Cisco looks like a strong buy for me right now. Cisco and Starbucks. So they're both downtrending right now. They could definitely, I'd like to buy them with some better support levels. But long term, I'm kind of adding into these positions again. Let me look at Cisco here. SYY. Why isn't it popping up right there? Okay, yeah, it's not at a... it's already up 77% in my portfolio, but it's not at a position that I don't mind adding more. I'd eventually like to add get all my positions to about $2,000 of equity, given I have opportunity in them to buy more. So the only positions that are really red are UGI down 5.47, Colgate, S-Bucks. So I'm going to buy a little bit of Starbucks and a little bit of Cisco. So let's do that. Let me know down in the comment section below, are there any positions that you wouldn't mind buying right now? Are you buying Apple, Google, Amazon? You buying some Facebook out there? 138.41 divided by 2 is $69.21. Let's go to Cisco once again. Buy. Punch that in and confirm that lock-in buy. And then head down to, oh, we got to go back to our portfolio. Look up S-Bucks. Oops, that's not Starbucks. Select Starbucks right there, buy and sell. And punch in our amount of $69.20. Confirm the buy and done. So I actually don't mind buying Starbucks on a downtrend. It's down 12%, right? But I have so little equity invested in it that it doesn't matter. Long term, right? I want to have this position to be about $2,000 long term. Every week that it's going down is a better opportunity for me to buy more of it. I've already decided to start buying it. I only have $345 in it. So if I'm getting a 12.29% discount on whatever shares I had previously purchased, that's a really good discount, right? Over the long term, the people that really like to buy at Starbucks, to buy their gift cards, to go in there to get their vanilla lattes, their chocolate, hot chocolates, and all that, they're not going to stop going to Starbucks just because they don't care about the share price. So eventually, Starbucks share price will just kind of rebound. Business will do fine. Volatility will go away. And Starbucks will just continue to trend upwards and just make more profits going into the future. So overall, it's all about opportunity right now. So that is it from me in today's video. There's not a whole lot else I'd like to discuss here. So again, if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. Really appreciate it. If you guys have any comments or questions for me, drop them in the comment section below or head over to my community tab, drop a comment in there. That always notifies me regardless whether you comment in my comment section or in my community tab. And that is it from me. Appreciate everyone tuning in today. If you have any questions, drop them below and I will see you guys in the next video. Bye-bye.